Yo, 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 yo! Welcome to today's videos. Today is August 7th, 2024. And today's video is going to be the trade recap for today. Let's get right into it. So, I want to start off first with my buys here coming into today. So, on the daily time frame, I was anticipating for this previous daily candle here, this candle's low to be taken. However, during the pre-market session and like during Asian and London session, we disrespected this hourly fair value gap here. Sorry, you can't see that, but we disrespected that daily fair value or hourly fair value gap. And this other hourly fair value gap that's in a premium of this range. So it's coming, after seeing that disrespect, after that, I was like, okay, well, we're probably going to attack previous day high, and which we did. So we took out previous day high here, and after we took out previous day high, my next target was this premium of this leg, which was from this high to this swing low. You should see it a little bit better. So from this swing high to this swing low, I took the discount and premium of that price leg, and I basically just try to find the equilibrium of that range. And why would I choose this high? So, well, this high here is actually a on the daily time frame, you see a little bit better too. So this high, we traded inside a daily fair value gap, and we displaced lower, and we created this daily fair value gap. So we had displacement away from a daily fair value gap, and then I got that, like I said, the swing high to that swing low. I took equilibrium and prices traded up to it. So now that was when I was like, okay, well, I'm just all my objectives in the morning just got hit. Previous day high got taken, and then we took out basically equilibrium of this range too. So that was when I was like, okay, well, we're bearish on the higher time frame, right? On the daily time frame, we're bearish. So I didn't want to trade any longs anymore, because like I said, if I were to take any longs, it would have been maybe from like, if we had a retracement back inside this hourly fair value gap into this fair value gap here. And then, oh my gosh, well, you can't. If we can get a retracement back inside this daily fair value gap or hourly fair value gap, and then target the equilibrium of this price range, but we didn't get any entry model for it. So I basically just let the trade run and do its thing. So like I said, after we took out equilibrium, we started to see bearish pressure here. We started seeing. It's not selling pressure, but we started seeing some move away from it, right? So that whole morning session was actually like garbage. It was hot ass. So after we took out equilibrium, we started displacing away during the New York PM session, right? And the trade that I do want to go over with you guys here is this trade right here. So notice how we still had London. Well, we actually did take out London lows already, but we took out London lows, and we still had Asia's lows intact and previous day low intact, right? So the trade I took here actually was based off of this retracement back inside this 15-minute fair value gap here. So notice how prices retraced back inside this 15-minute fair value gap, and we created this bearish power of 3 here. So this bearish power of 3 is, like I said, I can anticipate for this this upcoming 15-minute candle to take out this 15-minute low. That's the that's like the low hanging fruit. So I knew why we created that bearish 15-minute power of 3, and we also have this pretty bearish 30-minute power of 3. So both time frames here, the 15-minute and the 30-minute, are aligned with each other. So like I said, I can anticipate for this 30-minute low to get taken, right? And I can also anticipate this 15-minute low to be taken. So on the lower time frames here, can we find, can I find a entry pattern, a entry model? And let's see. So it was actually this one here. So like I said, we're targeting that 15-minute low, right? So that's the low that I'm targeting. On the 5-minute time frame, there is a fair value gap, but prices doesn't retrace back into it. On the 4-minute time frame, there's no fair value gap. Well, there is, but prices doesn't retrace back into it. But however, on the 3-minute time frame, there is a fair value gap that prices created. So like I said, we had that bearish power of 3, right? So now I'm going on to the lower time frames to find an entry model to take that that 15-minute power of 3. So on the 3-minute, we had that fair value gap. So let's go on to the 1-minute now, right? So here we opened up at 145 right here. We opened up at 145 and we spiked up into that 3-minute fair value gap, which is also within a 1-minute fair value gap. So when prices retraces back inside that 3-minute fair value gap, I took my entry, and then my stop loss would have been here, right? And notice how this is also in alignment with the 30-minute time frame, like I stated before. So this 3-minute fair value gap ends up being my entry, and that 30-minute low here, based on this candle right here, this 30-minute candle, I can anticipate for that low to be taken as well. So that 30-minute low ended up being my terminus. So here's my terminus. Let me mark it out for you guys. Terminus. And my first partial here, is this 15-minute low. So, because like I said, I can at least anticipate for this 15-minute low to be taken. And after we take out that 15-minute low, I would have moved my stops to break even. So 15-minute low, right? And this is an A plus setup, like A plus setup. You can't go any wrong with this trade, to be honest, too. Because this is like a setup I would always take. We came off of a 15-minute fair value gap. We had a reaction to it, and we had a bearish reaction to it based on this 15-minute power of 3. So this next 15-minute candle here, you can anticipate it to be open, create the wick here, the high, low, and then close. Its power of 3 is everything. I think it's the most crucial concept that ICT introduces, and you can base literally everything off of it, because once you understand power of 3, you understand how fractal prices could be. Because if you want to be swing trading, okay, you can swing trade like a weekly power of 3. If you want to scalp, then you can scalp with using a 15-minute power of 3, which I'm doing right here. But instead of just using only the 15-minute power of 3, I have time frame alignment with myself. So the 30-minute is aligned with the 15-minute, because the 15-minute were bearish. We came off of a 15-minute fair value gap. We created fair value gaps on the lower time frames, such as this 3-minute fair value gap here, and that ended up being my entry model. So that's gonna wrap it up for today's trade recap. Literally A plus trade setup. It's literally like, I don't know what else I would have done differently with this trade, but this right here is a perfect setup. Notice how we also, whenever you are trading, whenever you do think about power of 3, think about buying below the open and selling above the open, right? ICT states, or if you watch some of his older videos, he talks about you always want to be buying below the midnight open, and you always want to be a seller above the midnight open. Well, if prices are actually fractal, then apply that to every single candle, right? If you can apply, that concept with the hourly candle, bam, that introduces a whole new world. Because I don't know if he states this in one of his, I don't know the exact video, but he introduces this idea of view every single 4-hour candle as a daily candle. Once you can, he states that it's a statement, but he doesn't really introduces it as a concept yet. It's just more of like, hey, if you just do this, but he doesn't actually show you how. Once the first step I actually took to fully understanding and grasping the fractality of the markets is actually marking out every single important open. So for me, like I said, I'm a scalper. So I can trade with 15-minute models, right? Every single 15-minute interval, there's a new open to it. So there's this, like I said, 145. That's a 15-minute interval. There's hourly intervals as well. So every 0 mark. So here you can see me mark out the 12 o'clock open here, the 11 o'clock open, not 4 o'clock, but 10 o'clock open. Those intervals there, they're extremely important because, like I said, it goes back to that concept of buying and selling. Whether you're buyer below the open or selling above the open, you need to mark them out. I mean, unless you have like photographic memory or whatever, then I suggest you guys start marking out those opens and really understanding power of three. Power of three is everything. I feel like it's the most important concept, and I stick with one trading model as well. I don't use order blocks. I don't use breakers. They're more of a confluence, because a fair value gap, a fair value gap will never change. This fair value gap right here, right? Everybody will be able to see it. But let's just say, like some people here probably could have seen this as an order block. Like this could have been, someone could have seen this as an order block, and some people wouldn't have seen this as an order block. I don't know, like it's too subjective. But fair value gaps, they're literally there, and that you cannot change the difference between a fair value gap and, like, if you look on another person's screen, a fair value gap will be there. If you look on my screen, that fair value gap will be there as well. But breakers or order blocks, they're a little bit subjective, and that's one of the concepts of ICT that I never really understood fully, is grasping, okay, this candle right here, this last down close candle, this is a order block. It's, to me, I really it's just not part of my repertoire. So I prefer using fair value gaps more. But yeah, that's it for my trade recap. I'm gonna go over what I do have in plan or in mind coming into tomorrow at least. So we started getting this larger displacement away from this daily fair value gap now, right? And notice how I marked out this weekly open as well. If you apply that power of three concept to every single candle, like, you can apply it to the weekly candle as well. So I noted out the weekly open, and notice how whenever prices came above that weekly open, we started seeing bearishness, because we're bearish. We have a daily fair value gap that we should respect if we're actually overall bearish. And on the weekly time frame, I am anticipating a creation of a weekly fair value gap. Depending on how we close this week will tell me if we retrace back inside this weekly fair value gap or not. But as of right now, coming into tomorrow, I am anticipating for us to take out previous day low. So let's say we continue to start drifting lower here in this last 30 minutes, start drifting lower, and then we get some sort of retracement back, right? And this low becomes the daily low. Let's just say that's the daily low. I'm anticipating for previous day low to be the magnet for prices. I want I want to see prices draw down to and take out previous day low, because like I said before, there is a reason why we created this bearish power of three. It's not like, you know, whenever I got introduced to power of three, and like I started viewing, you know, all the candles as power of three, I started taking every single power of three model. But one question that you should ask yourself whenever you start taking power of three models is, why did we create that power of three? Like, why did we create this bearish candle here? So why did we create this daily candle? Well, there's a reason to it. There's this daily fair value gap that we retraced back into, and we retraced above the weekly open. We came into the daily fair value gap. We also, like I said, we also traded back inside the equilibrium or the premium of this price range. This price range is important. It's a higher time frame dealing range. And there's a reason why we created that, you know, bearish power of three. So I'll say it again, coming into tomorrow, I am anticipating for us to take out previous day low, and maybe, you know, even attack Monday's low of day. And with that, that's gonna probably wrap it up for my video today. Yeah, if you guys have any questions, you guys can join the Discord in my YouTube bio. If there isn't, I'll catch you guys later on the next one. Thank you guys so much for watching, and peace out.